Good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini, a futures trader. We do this every Thursday, and the goal here is all in line with the education that we offer here at Bookmap. We have an educational course. We have the advanced webinars that go through that educational course in the live market. So you can apply what you've learned, and then you have the live trading from Scott and from JTrader, stocks and futures traders, so that you can learn from others as well. All right, so they will be taking live positions in here. It is in demo paper trading mode, but peek over the shoulder of a professional such as Scott, and he's got some unique history here that trading 10% of the S&P back in the early 2000s. Anyway, the contact information for Scott is here. He does offer a trading room, a trading course. You can go to his website. You have his email here as well if you want to reach out. When we go through the disclosures, then we'll turn it right over to Scott and get started. Okay. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Scott, why don't you go ahead, take it over, and we'll present your screen here.
Okay, you hear me, Bruce?
Yep.
Good. Alrighty, let's see.
There it is. Got it. Got it.
Okay, cool.
All set.
All right, so the rare signal in the ES. I mean, I was out of town a few days, but yesterday was terrible trade and the afternoon anyway. So we finally have a signal here. You had 1500 buy ice, 500 stop runs. This is what I call a double whammy. It's the money puke into the weighty hands of the big money, which is the buy ice, and you can see right now they are not correct. This is one of my, so this would be a broken double whammy, and the way I determine that, hold on, where is my drawer? You know, if we are able to, so I draw these volume events, and we'll go over how to draw them here in a little bit. Hold on a second, why is this not working for me? So this drawer thing gives me update every day, and then it still doesn't work. Hold on one second. I'm not. So let's see here. I gotta get rid of this thing. Sorry. Did not test this out before I started. All right, let's try this again. There we go. All right, so what I was saying is this is the volume event here, and we had this is the zone. We'll go over how to draw these, but this market definitely has moved more than an ATR, 5-minute ATR. I use the 5-minute. While there's ATR, this helps me judge the current volatility of the market, which is right now 8.2 points. So it means its range is about 8 points, 8.25 points every 5 minutes for this period. So the way I judge these and whether they're bullish or bearish is if the market is able to push at least an ATR away from this volume event, which this obviously did, and then some, right? So I trade these one of two ways. I'm either aggressive out of the area if I love the area and I have a strong conviction of what's going to happen based on everything else that we'll talk about today. Then I will jump in the minute this thing gets in just outside an ATR, 10% of an ATR, 110% of an ATR away from the zone. I will go short, or I will wait for the ATR or then some, then a retest, then a failure, then I'll go short. I'm waiting for that. I'm still a little hesitant to short right here, even though these markets look like they're about to get killed. They're already down pretty big today, but bigger picture stuff. These markets do not look good. So, yeah. So we look at the way I trade is I look at market structure longer term, and I try to, I'm a day trader and I'll trade both ways, but I want to see where we are in the bigger picture. So I'm not standing in front of huge, balance breakdown, puke, so on and so forth. And then I also judge on what happened in that structure, what should have happened, so on and so forth. So you can see here we had
and soybeans iceberg buys ES 200
what I would call a failed breakout. Got through the high volume node of this market should have done this. It didn't. When the market doesn't do something that is expected, you can expect multiples the other way, and that's exactly what happened here. We ripped about 200 plus points up to here, and then we failed back down here. So overall, this is looking. We had a failed. Then you go to more current structure. You had a failed breakout, kind of like this was a failed breakout here. This one held, but this one obviously did not. And then we just gapped down overnight from here, and we were right through that high volume node, and now we're into this high volume node of this balance area. So this zone right here is very, very important, where this market could bounce. For right now, that's why I was a little hesitant. I'm going short. Where is my chart here? I gotta make sure okay, just want to keep this up so I don't miss anything. So this could bounce right here. So that's why I'm waiting for retest failure to potentially go short. I don't love this area to go short, even though bigger picture, this thing looks like it's going to die, and it's going to be even more pronounced in NASDAQ. We'll look here in a second. But this is an area where, so I draw my zones on my charts in the 4 important areas of charting. Tops and bottoms of balance areas, high volume nodes of balance areas. I don't actually draw the zones for those just because it's too much in my chart. But you can just eyeball these areas and know where the middle is. It's just an area. It's not an exact price, right? And then directional conviction and buying and selling tails. Like this would be a tail here where this zone. So you'd be amazed when you start drawing like gaps and things like that. You'll see all these different things that are in the same area, right? So this was a gap up this day. This is where we closed, and we gapped up to here, and then we came down right at the open, instant rejection. That was a buying tail, and you can see that held for the time being. It held here, and then we had a huge gap that led to this huge move up, right? So this is where we're at right now. So I fully expect some kind of bounce here. That's what I expect. But I'm not going, so the way I trade, so if I was just staring at this chart, I would be like, yeah, this is a great area to go long, right? Because this is where this started. This is a straight, we gap down all the way. Some of the best trades out there are when you get straight beeline moves into very important areas, which this is one of them, for the fade, right? And so if I was looking at just at a bar chart here, I would be taking along here. But the way I trade is trading off of the real-time current volume events. Right, so I am not going long unless I get a bullish event. This was not a bullish event because it was able to push an ATR and then some below here. So I'm not going long off this. If this could have held, I would have taken a shot. If this moves a little lower and I get a bullish event, I'll think about it. But for right now, I'm waiting for a retest of this area. I want to see a failure, and then I'm going to give this short a shot. It's still a little risky in this exact area. I'm a little nervous to do that just because of the zone, and we're near the blue lug, which we'll go over here. But I can tell you, if this market gets through this zone, I had a longer term zone here, but a lot has transpired since I drew this zone. I mean, this was, directional conviction, this held here. I think we're going to get one of these. So again, I come up with a thesis every day, and I'm ready to, I come up with if-then scenarios, and I have to pivot. In trading, you have to be ready to pivot. So I think if this gets through here, this is going to be a huge move lower. What I think is also going to happen right now is this could hold, but I need to see a volume event to go long, is what I'm saying. So I will go short. I'm a little nervous into this zone that may hold for now. I think it will break, but it'll probably take a while. A couple tests of it today. And then the other thing that I look at are these what we call lugs, Ludwig levels. You can see this is, so the blue is,
Iceberg by RT, 152 contracts.
the blue and the red are support and resistance. They're incredible for day trading, especially with the volume events. And then when you can overlay them with other areas, aka confluence, they're even more powerful, right? So you can see right here, right now, we may bounce. Blue lug, extreme standard deviation of VWAP. I'm not really saying anything in market profile as far as this is where I think we're headed today, but again, we'll see. But for the time being, this could bounce, but I'm not taking it long until I get a volume setup. So this is why I'm hesitant to short. So the volume event that I just showed you is up here, right? So I would, if we do this and we do that, I'll give it a shot into the blue lug. I know what I'm going up against. I would love to see that and then see the relative volume pick up, and then I think we can pierce through here. But my issue is I rather wait for some kind of bounce. What I would really like is this market just to rip up through this most recent volume event and give me another one further away, and then I would love to short, because if anything, at least I have some room to the blue lug, right? So it's just a tricky area is what I'm saying. It's just a long way of saying it's a tricky area, but I still will short this because my main driver are the volume events and how the market reacts to volume events. So this got an ATR, if this retests, this fails, gets an 110% of an ATR, I will short it. And all these values are already in my spreadsheet, and my room helped to develop this. Thanks to them, this is much easier for me. So you just put in literally the current ATR, 8.12. That's close enough. This is the zone that I just showed you. So if I want to go short, I know one ATR away from the zone was 39.41. We obviously got to that. We got well below that. Right now, if we retest the zone and fail, then this is my position trading strategy. I can short at 40.25 based on my account size. Should I gotta move this? Drawdown lately. So risking that amount, you should never be risking more than 1.5 to 2% of your account size on any individual trade, and 5 to 6% of your account size in a day. Ever. You should, if you hit 6%, you should be done for the day. There's always another day. Things just are not clicking that day. That's the way markets are, right? I'm not going to go to that rant today, but you guys hear it every webinar. Most important part of your trading. If you're trading too big, I don't care how great of a trader you are, you will blow out your account on a bad day eventually. So heed this advice, number one. So I can go short at 39.40 quarter, and my stop would be 39.61. And I know traders, and we talk about this every webinar as well. Well, I got to risk 21 points on this trade. It doesn't matter what this is. This is what adjusts if you are trading a percentage of your account size, right? So the current volatility tells me if I want to stay out of the noise, the algo noise, this is what I have to risk. And the way I trade these events is I force these markets to, so again, I'm waiting for a retest failure. If I go short here at 40 quarter, well, my stop's going to go an ATR plus 10% above the zone, and that forces these markets. So I stay out of the nonsense, the algo, which is 80-90% of the market, the trade, where it's just basically random back and forth that are stopping traders out. I will force this market once I'm short to not only get through the volume event, an ATR plus 10% away from it, and then I'm wrong on that trade and I move on to the next one, right? And everything is already, it's not that I'm just trading by feel with my size and so on and so forth. I have everything laid out here, my prices, how much I can risk, where my entry is, where my stop is, and then I just follow my rules, right? And trading is a percentage game, and you just have to keep taking the trade. If you have an edge, and this is the edge the best edge I've ever seen in my 20 plus years of trading. You guys hear it every webinar, and I'll keep saying it and saying it and saying it, because this is what drives markets. I don't care what indicator you're using, Bollinger Bands, MACD, Fibonacci. It doesn't mean anything unless you have the big money playing there, or the dumb money, so on and so forth, meaning volume events, right? Because these are basically trap traders. So in this instance, the paper came in and bought 1,500. They're not feeling very good right now. So a very basic pattern that happens nonstop. As you move away, it retests the area, and then it fails. And that's what I'm waiting for. Again, I already have everything mapped out of what I think should happen based on this volume event. And my bigger picture view. Again, this looks bad enough that I'm willing to short this. Normally, I would not short this even with retest failure into the blue lug, but I will give this a shot. But I'm still waiting for this zone to retest. So let's actually, while we're waiting for paint to dry as usual lately, let's take a look at what's going on. And so this is what we talk about all the time too. So when you come every morning, whatever market you're trading, you should be looking at multiple markets. So you can, if one market sucks, you can move to the next one, right? So you come up with a bigger picture view and a thesis, kind of like I just did with ES. Actually, before getting into this, let's just quickly look at NASDAQ to show you. This one looks a lot worse as far as being able to see. So this one was a basically perfect balance area. You can see this balance. Just imagine it as traders placing bets, right? And when one side is wrong, that's where you get the puking. So this is a legitimate failed breakout of this structure. It tried to move higher, failed. You had another smaller one, tried to move out, failed. Now we are through this high volume node. This is not looking good for this is a lot easier to look at than the ES as far as just slap you in the face structure, right? So now we got this balance area here. You got this little guy here, through that one, coming down to that one. This is an area where this could bounce temporarily, but overall, I'd say over the next few days, and Friday's or tomorrow's OPEX as well. After that expires, all those options expire, I'm expecting one of these. Why? Because this had its chance to do that, and it didn't. That's telling you be ready to the downside. Does that mean is this going to happen today? No, but bigger picture, bigger moves, even if you trade longer term options, that's what that's looking like, right? So I want to try to position myself on the short side of the market. Does it mean I won't take longs? No, if I get a volume setup, like we were just talking to ES, if I get a volume setup that shows me long right now, I will take it. I'll be very cognizant of the fact and be ready to peel out, because even when markets are getting killed, you do get these shorter term bounces, right? But I know from what I'm looking at that the bigger move is coming, is going to be down, should be down. That's my opinion, right? So, and it's from my experience of watching markets for so long. So that's what I'm waiting for. So anyway, back to what you want to be doing is you want to be looking at your markets overall for the structure. So what do I see in soybeans here? Well, a lot of times you're going to get conflicting information as far as which way you want to be, which side. It's not always as clear cut, kind of like the Nasdaq and ES look like they're going to die right now. Like this is bullish. Obviously, this is a huge balance. We're above this balance area here, right? And you built balance, but now something's changing here a little bit. Granted, bigger picture, until we get through this high volume node of this balance area, you probably still want to be looking for areas to go long. But right now, over the last few days, that's a balance area, that's a balance area. So this market tried to bounce out of this, move out of this, I should say, and then build balance. Now we had a failed breakdown of this balance, and then that's a failed breakout of this balance right to the high volume node. So this, to me, looks like we're at least going to pull back to this area. This market, so this is what I'm talking about, conflicting information. Longer term, this looks long. Shorter term, this looks like this is going to get smoked, at least down to here, right? So meaning longer term, yeah, it's bullish, but will I take shorts? Absolutely, especially because this shorter term structure is telling me this, right? So, and we just heard some volume setups. We're about to break this zone. So I may, based on what I just talked about, I would be willing to take a short aggressively if the current volume setup, and I don't know what it looks like, we're going to find out right now, tells me to go short, right? Based on what I just talked about. So this is 400 buy ice. We had some big buy ice at the open, 600. That's a ton. Threshold for beans is 150. So this is 5-6 times, and then you had another 400 here. So you have over 1,000 buy ice right here, and I didn't even count this. So you had 550. So that's 800, 1,000, 1,400 buy ice. That is an absolute ton, right? So I'm going to draw this most recent event, and I'll trade off that. But somebody's trying to hold this up, right? So we talk about this all the time too. As far as is paper always right? Absolutely not. Would it behoove you to try to be on the side of paper? Absolutely, because they move the market, they run the show, right? But when they're wrong, you get the same kind of effect as when the retail trader's wrong, right? So this area is really important, put it that way. So somebody's selling a ton of them and somebody's absorbing a ton of them. So this is what we look for. So, you could just draw, if you're looking for a bigger picture type of view, you could draw a zone, incorporate all of this buy ice, right? Because whatever way this breaks, you're very, very likely to get a big move. This is the volume. These are the volume events. These are traders that are loaded up. And when this starts to move out of here, you're going to get puking. So that's what I key off when I trade. So let's just draw this current zone. I think I already missed this, but you'll see. Let's take a quick look at ES here so I don't miss this trade, which is my MO on these webinars. There's your retest. That get within. Yeah, so that got within. That zone, it's 49 quarter. So 48.50 was. So you could see this got exactly where I thought it would get. Hold on a second, I had a position on there. As far as this is considered a retest. It got within 10% of an ATR of the bottom of the zone. So that is a retest. Here's a failure. Now I need to go short basically right here. And I forgot what size I need to put on. Put on here. So I said 40.50. So I would not have been filled there, but again, this is a riskier trade off of this volume event because the blue lug's here, that zone's here, but this is my pattern I look for, and I'm going to take the trade. You got ATR plus, here's your retest. This is considered a retest because it got within 10%. Here's your failure. I will go short. If I get filled there, my stop goes at 110% of an ATR, which is 61.75. All right, so we will hear if that gets filled, and now we just got another volume set up in here that we can draw. So somebody is buying the absolute bejesus out of this, out of these soybeans. So that's great information. If you're staring at a chart, you have, like if I told you, if I'm just staring at this chart right now, I would have already been short. I've been like, oh, this is a failed breakout. This is a breakdown. Through that, I want to be short. But I'm not. Do you see me putting on shorts right now? No, because these volume events are not showing me short yet. And this is the driver of the markets, not, yes, structure is the driver of the markets as well, but this is what's happening right now, and that's what I key off of. All right, so let's just draw. I'm going to incorporate both of these because here's basically back to back. This is another 700 ice. So let's draw this. And we got the natural gas number coming out here in a few minutes. Sorry for this tedious. Any update on these drawing tools, Bruce?
Not at the moment.
Alrighty. I'm used to it by now, but it'd just be awesome to have at least hotkeys for. There are hotkeys, but not total hotkeys, total control. All right, so here's the zone, 74.75. The bottom of the zone is 71.75. That incorporates all of this ice right here. So I'm going to put that on my spreadsheet, put the ATR, and then I'll know how I can trade this. And like I said, if this area breaks, I'm going to trade this aggressively to the downside because of what we just talked about in the structure. Right? So I come over here. And again, this spreadsheet is part of my trade room. I trade live twice a day, almost every day. And you get access to this, and it's much, much easier to know your prices, so on and so forth. 74.75. And the bottom of the zone is 71.75. And I gotta figure out my ATR. Why that's not showing? Current ATR, I can see it there in the middle left, 2.46. So once you input all those values, it tells me where I can short. So I'm going out. This is another strategy we're trading in my room. It's more of a scalping type of strategy. Way more active than the position trading. But right now we're doing position trading. So I could put on, based on my risk, 60. Based on my risk, I could put on 7.5 CS, so round up 8. I can go short. Remember I said I'm going to go short this market aggressively. All right, I'm filled on the short on ES. We'll come back to beans here in a second. I'm short here based on my spreadsheet. So like I said, this is a riskier short based on all this, what's going on in this area, but I'm willing to give this a shot. So I just shorted at 40 quarter. I stop out at 61.75. Here's my MO, of course, fill to the exact tick. If you guys knew how often that happened, you would be amazed. 61.75. I know every trader says the same thing, but it's just, again, at least I trade publicly, so I have backing for this happening. I mean, Bruce has probably seen it 500 times just in the last few years of these webinars, but it is what it is. I'm short. All right, so let's look at beans. All right, so for the beans, so like I said at the beginning of the webinar, I have 1 of 2 ways of trading this. I will either trade the minute this breaks from this area, 110% of an ATR, or I'll wait for ATR retest failure like I did with the ES. This one, based on what I just talked about, shorter term, I think this looks like it's going to get smoked. The other thing I do need to check that I don't want to get. So this is, again, this is a yes. This is why I'm still nervous about it. We need to get through this blue lug and build new lugs, and then it should be bonsai to the downside. There's beans. There you go. All right, so we're not that close to blue lug. I'm okay with that. This is actually a good example. So market profile wise, I can merge these 2 days into a composite profile, right? So this was yesterday, this was the day before, this day overlapped this day by more than 50%. So I will merge those. You'd be amazed at how powerful these market profile composites are. And they're just something that I look at to help with my thesis and judge areas to help get out of, piece out of the trade. And you can see this market opened up. And then what you want to do is try to come up with a story every day of what's going on. So this market, let's move this. So what story did you get for this? The market opened up, came to the top, pretty close, right out of it. Now it's threatening to get back inside here. So this is an area it could bounce, but I will, and we have all these volume events. So you have all this buy ice here. We already know that. So if this buy ice is wrong, we're inside this prior composite, and when markets get in prior composites, you expect the other side. So that's natural gas. So if this can break this area, so if I'm staring at this without volume, I'm like, okay, I want to be short. Now I have a volume event, which is my driver. Now if that breaks, now I know, hey, we're breaking into this, and we have that broken ice of like 1,500 buy icebergs that are wrong, right? So that's why I'm willing to short there as well aggressively. So I'm willing to take this aggressively, meaning I will get in immediately on an immediate break, ATR 110% of an ATR below that zone, which is 1469. I can put on 8. I stop out at 77 quarter. So we will set this up. And that is locked and loaded. So the other thing that I was getting into this earlier, and I kind of got off track. When you're looking at, bigger picture stuff in the structure and market profile, and you're coming up with your thesis for the day, what you also want to do, we've talked about this every webinar since I started doing webinars, even when I was doing stock webinars for Bookmap. Look where your liquidity is. These are magnets. These are the big players. They will force this market into these orders. Again, how do I know that? Because this is the game I used to play every day. I would put orders in the order book. I'd put 1,000 lot or whatever, and then I would start playing games and start to sell, see how the market would react. And then if there was no one like fighting me, then I would just step on the gas and I get people, you can see the flurry of activity. I would make it look like there was a ton of activity. There was because of me, but people would jump on my coattails. Then I push it right into my bid. I'd be out of my trade on to the next one.
Sell GC. 159 contracts.
So that's the routine, right? So it behooves you to know where this is so you can see the difference.
Gold ice
There's
iceberg
really
sell
nothing up
PC,
here is relatively.
53 contracts.
I'm not going to trade gold right now. So this is another factor. We talk about the scale all the time, the old-fashioned scale. When you're deciding which way you want to trade, you're rarely going to get everything in one direction, right? So on the bull side, this is the top of that market profile. Obviously, a ton of buy ice here. That probably represents more than one check mark. But on the bearish side, I know that we had that structure that failed, break out of that structure, break down of the structure that we just talked about. We failed out of that market profile, and we're trying to punch in that other market profile. I just showed all this, and then I know there's all this liquidity down here. I mean, there's some here too. So that looks like that to me. So that's why I'm going to be aggressive on this trade. All right, so two different entries. The ES I waited for ATR retest. This one I'm getting in aggressively. So we will just wait. Beans most of the time move a lot slower, so that could be a while. So again, this is why I wanted to be short this. That is a failed breakout and a breakdown. Do that, I expect. And then I will watch this zone very closely. What's the zone? Well, there's a bunch of stuff over here. Directional conviction, selling tail, selling tail, directional conviction, and then a gap, most recent gap, right? So if I do get short, I'm going to watch this area very closely to see how it reacts, and then probably be out of most of them. Any questions with all that? Any of that, Bruce?
No, sir. No questions at this time.
Okay. Let's see what this is doing to me. This is just basically bouncing around here. It'd be nice to just go one tick below my entry just so I can not complain. Let's see. Oh, we did. Actually, that moved, yeah. Of course, it's back. I couldn't even enjoy the move down there. It's already back. So this, guys, this is what trading, this is what goes on the majority of the time, right? So if you got short there, say you guys are like, oh, I love that short idea. I'm gonna go short with Scott. You get short and you get this. You're like, oh, I'm gonna move my stop down to break even. Well, now you're stopped out. Did it do that? Yeah. Could you possibly save yourself money? Yeah. But this is just nonsense trade. These are algos. You don't think the algos know that traders trail their stops? When they know the big money's not really playing, there actually was something here. It wasn't a ton, but this was not my threshold. I looked for 700. But my point is, these algos, these big firms, they have the same information. So when nothing's going on in here, the big money is the algo's worst nightmare. But when there's nothing going on, which is 80-90% of the time, then the algos start playing games with your money, and they take your money, and you trail your stop, and you get stopped out. Then you watch it drop 50 points, and you're sitting here beside yourself for the rest of the day. Oh my God, why did I get out of that trade, right? So this is what you have to condition yourself. This is against human nature to watch this kind of activity. This is why traders struggle. Why do you think I gravitated to being a scalper in the first place back in early 2000s? Because it was very hard for me to sit through this nonsense, right? But it takes watching this and understanding what to expect. Then it doesn't bother you as much. Yeah, it still sucks, especially if you think you got it and then it comes back and then this. Yeah, it drives you crazy. But you condition yourself after a while to just understand this is probably what's going to happen when you put on a trade. And this is why I place my stops outside of an ATR, outside of the volume event. So they can play the games all they want, but if they can get it outside here, then fine. I'm wrong on this trade, on to the next one. Right? But I don't let them algo me out on this activity. I won't do it. And this is all from experience of trading these. It's not just my opinion. I've traded these zones since day one, or these areas, and I've traded them every which way you can think of, right? I'd get in, even my course, I would get in really aggressively. My course from 2020, new course it's almost done. Hopefully have it done by Christmas. But I would get in like right on the break of the zone, risk right above. And I just learned from trial and error, that's just not the right way to trade it. So I've evolved. You have to evolve in your trading, right? To get better. I'm always looking to get better. I never ever will think that I know it all. And I'm always looking to, if I find something that enhances my trading, I will definitely look at it. But I've learned this is the best way to trade these volume events so I don't get stopped out on the nonsense, right? And you can see right now, this is complete algo nonsense. You look at the relative volume, there's really nothing going on here. So this is Sierra chart relative volume, other trading platforms have it. Thinkorswim has a different type of relative volume. I'll just go over this quickly because there's always questions. There's even questions in my trading room. So this relative volume is not the same as the Sierra chart. All this is showing you is the prior 65-minute bars. So it's picking up, it's basing the volume over the last 60-minute bars. So this looks like a ton of volume at the open, right? Well, this is what it usually is. It's usually between 7 and 8 times normal because it's basing it on overnight trade. So this does not give me what I want to see, right? Unless you know every time period and what, like for instance, I know the opening is always 7.5 to 8 times normal volume. So that's normal. This is not a spike in volume. This is just normal for that time period. This does not help me, this type of relative volume. I have it on here, but I don't trade off of it. I don't look at it. This is what helps me. This is a relative volume for the last 30 days. So I'm able to see this exact time period for the last 30 days. I know this, and if it turns yellow, it means it was more than 2 times normal. So I know on this down move, at this exact time period, 750 for the last 30 days, this is 2 times normal. That's the information that's actionable to me, right? So when you can use this information just like we draw the SI stop iceberg events on the chart, right? So you can see, because you got to remember, yeah, they were selling heavy, but somebody was absorbing these. That's why you have to have a equal number of buyers to your sellers, right? I mean, you're going to have who's more aggressive, and that's what cumulative delta is. But the point is, somebody was selling this heavy, yeah, but somebody was also buying it. They were buying it passively. The sellers were the ones being aggressive. But the point is, you can draw this area over this high relative volume, and you can watch how the market responds. And you can see when it bounced around in here for a while, and then when it finally broke, then you get your puke. This is the same concept we're using with the SI indicator volume events, right? Same exact thing, but it would behoove you to know where these areas are. So say this market bounces back up, recovers, stops me out, and then gets above this event, well, and even over here, right? Well, all these sellers that thought they had this are now in trouble, right? So that's how you have to view this. So right now, the sellers are still in control. It hasn't really violated this area. Even this area for this one little bar has not been violated. That was basically here, right? So this is an area. I want to see what happens. Hopefully this can hold. This isn't looking not great right now, but again, I knew what I was getting into shorting right here. I was willing to give it a shot in case the big money did come in and keep pushing it, but I may get stopped out of this. It doesn't mean that I'm not going to go short again. And I did try to take this conservatively, right? So I did everything I could do. I put on the trade. I understand what I was going against into this zone, into the blue lug, and I took a chance, right? But you can see this is bouncing once again. Now the trade's starting to slow down. We're getting into that time period. This is bouncing right here. The big money did not come in to push it, so this is more than likely going to be a losing trade. That's the way it is. That's what trading is. You're taking your probabilities. I gave this a probability that this could just die right now. It's not going to happen. It stops me out. Another setup's right around the corner. I'll get back in. That's trading, right? And if you have your rules, your risk rules, your entry, exit, stop rules, you just keep putting the trades on. And that's what trading is. All right. Really nothing going on as usual. So we can do a little spot gamma. Let's take a look at the so this is the hero indicator. Again, if you guys go on my website, Ludwig Levels, that's, you got to go to her website. It's ludwiglevels.com. She's got a free 3-day trial. Just say you saw it on the Bookmap webinar, you get special pricing for that to try them. I mean, if you decide to try them out after the trial, and then everything else, like the spot gamma stuff. There's a for this hero indicator. There's a it's just got the code. Put on here, this regular spot gamma to get your, and these are very important as well to know. One, you get his commentary, which we'll go over here in a second, but you also get these levels. These are really, really important levels, right? So he talked about 3950. Well, 4,000 was a huge level. We gapped right through there, right? So what's probably going to happen here is we could gravitate back to that 4,000 level in the OPEX tomorrow, but I still think this is going to happen overall. That doesn't mean it has to, but it would not surprise me if that got back up to this area. His other supports were 39.60, 39.50. We're obviously below both of those as well. If this area breaks, which I think it's going to, again, I don't know when. I was hoping it was right then. Then it's probably going to get very ugly. Now, you know this information. We'll read what he says about it. And then when you overlay your bigger picture structure view, you're like, okay, I'm ready to, this thing's going to get killed, right? So that's what I was hoping for in this zone. I'm not stopped out yet, but it's not looking great. But anyway, these areas I use in the very basic sense, right? They're support, and when they break, then they're resistance. Support, then when they break, resistance. It would behoove you to understand these levels and know that this is where the most options activity are located, because these dealers are a big participant in the futures markets because they have to hedge their positions. So a phenomenon that's been going on lately, and I'm surprised it has been going on longer. I'm actually mad that I didn't think of it back in the day. I didn't really understand anything before Spot Cam as far as the option complex, the way he uses it. But what's going on nowadays, and if you think about this, it's a great strategy, right? So these are the 0 date to expiration options, right? So meaning options that are expiring today. So think about this, right? So if you're a big player and you want to buy, yeah, you can just be coming in here and buying futures. But what would be a better strategy? You can load up the dealers, because you know dealers are not going to hold positions. They have to hedge themselves. So if you start buying the short term, this is looking bullish right now. This is SPX, so that's this blue or purple line, whatever color that is. I'm colorblind. If you wanted this market to go up, you're a big player. You can trade thousands, right? You can start buying the 0 date to expiration options, and you know as the market moves up, these dealers have to hedge themselves, so they have to, because they're on the other side of the options trade, so they have to turn around and buy futures to hedge themselves. So it's like this cycle that just, it's going to happen. It's not like you load up these dealers with futures or with the options and they're not going to hedge. So what you can do is buy a boatload of call options. Say you buy a boatload of calls. So that means dealers are short calls. What do they have to do to hedge themselves? They have to buy futures. So you buy the calls, then you start to push the market. Then you have the dealers come in and they have to hedge themselves, and they're buying futures as well. So you get this cascade effect. It's actually genius. It's complete manipulation, but it's legal manipulation, right? But the thing is, you're going to get a response because these dealers have to hedge themselves. So that's why that's a great strategy. So this is why I watch this, right? He's been talking about this nonstop. So he's got 2 different options. You can look at total options, or you can look at the 0 date to expiration. We've been looking at this more in my room just to get an idea, right? So here's, SPX and SPY are the main drivers. And you can see both these are, they're not extremely bullish, but they're definitely, the options are moving up on this one. This one's moving down a little bit, but you can see, so the black line is the price. So, this is another factor when you're doing your scale that we talked about. You definitely take a look at this, but this may do that, and wouldn't surprise me, especially in the area that we're talking about. But it behooves you to keep an eye on this, is what I'm saying. So for today, I'm sure he's okay with me showing this. We're obviously much lower than that now. 4,000 remains the massive level here, which we see as overhead resistance since tomorrow's OPEX. So if we do start rallying based on I'm going to get stopped out of this trade, but I will definitely be watching, 4,000's way up here. And he's talking about the cash price, not futures. These are just the future equivalent, right? So you can see here, 4,000 in the future, or in cash, is 40.25 in the futures, right? So if we do rip up there, that would be an area where say we just rip up there, which would not surprise me because that's what these markets do, to screw all the shorts first. Come up here, say you get a volume event. Well, in this area, I would, because I just talked about it, use these as very simplistic, resistance, support, and resistance. This would be huge resistance. If I got a volume event up here, I would be shorting aggressively. I wouldn't be waiting for ATR retest failure. So that's quite a ways away, but you can see these areas, and you just know these are very helpful in coming up with important areas. So he says Sees overhead resistance into tomorrow's huge OPEX. Below 4,000, key levels are 3960, 39 to 3950. That's basically, we're below that right now as well. So if we do rally up here, this is another area where I would probably go short aggressively on a new SI event. Implied volatility, giant OPEX position causing some interesting flickering as SPX levels out of the money puts are decaying rapidly, blah, blah, blah. Massive level, the bulk of which 150,000 calls, 160,000. Like, this is very important information to know, right? Because these dealers have to hedge themselves. Expires tomorrow AM. We bring this up as it also speaks to SPX put positions being quite small. It's likely some of them get rolled tomorrow, but it feels a bit like a ghost town. So when he's talking like this, he basically goes through here and he's saying, let's see, he says, we're not saying we're going to break, but if we do, watch out. Here we go. The main area of exposure we're watching is to the downside. We're in a break of 3,900 could catch many traders off sides. So you know this information. You know, guys, what he's saying is traders are poorly hedged below there. Right? Everyone's expecting the Santa Claus rally, right? But you know from this information, or you should, or you do now after the webinar, that this is looking just from a structure standpoint like this is going to get crushed. Now you know that traders are under hedged, under 3,900, right? So if this thing starts breaking into tomorrow and early next week, you can hold, into for bigger moves is what I'm saying. So you see how everything just ties together, right? And then you come up with the thesis. It's go time. Right now, this could bounce around, but I'm telling you, this thing breaks 3,900, it's going to get ugly. And Santa Claus may not come this year for many families, for many trading families. No G.I. Joe with the Kung Fu grip. All right, any questions on any of that, Bruce?
What movie was that from?
I don't know. I've heard it somewhere, but I don't know. I think it was Trading Places.
I think you're right. No questions. Rather quiet today on the questions.
Well, nothing is going on, so I mean, I don't know what's been going on in these webinars the last few weeks. It's like just, at least I have a trade on today. Last, I think 2 or 3, I haven't even put a trade on. And guys, that's trading, man. You got to be able to be patient and wait for what you want to see and not be forcing trades. If you force trades, you're gonna get in trouble, right? So last couple webinars, it just hasn't been there, and that's just the way it is. Right? All right, still alive in this puppy.
So a few questions actually coming in.
No, too bad. You said no questions. So.
Yeah, no, Bert was just looking at some of those SPX and SPY levels, I guess, with the options, and yeah, he's just kind of confirming there. And then are you able to use CR charts to combine the daily charts like Falcon?
Like who?
Falcon? I don't know. I'm just reading it out.
Who's Falcon?
Falcon.
Falcon?
Yeah.
Falcon's my trade. This is my computer. It's made by Falcon. They make trading computers. It's one of mine. I got 2 different computers. I'm remoting into that one. This is where I have the Sierra chart, but I don't know what he's asking.
Yeah, no, it was kind of a misunderstanding there. Yeah,
I'm remoting it. So this is showing Falcon because I'm remoting into this computer. See how it's remote desktop? Because I have all my Bookmap stuff. You guys can't see it, but I have 2 huge monitors, like the extra large horizontal mart, where I could fit 3 Bookmap screens on each monitor, and then I have 3 other monitors on this computer, and on my other computer, which is this one, I have my Sierra charts, and then I have the relative volume charts, and then I also have over here, which we look at, which we haven't looked at. We have the this is part of my room as well. You guys can see this stuff. So we have the edge, which shows how many stocks are overbought or oversold for the time. This helps keep you out of trouble. You're not like shorting into the hole with this thing oversold, so on and so forth, which it looks like I may have done that at the time. I forgot to look at this like usual. And then we got the, any headlines that come out, and this, you can hear it as well. You guys heard some of the talking, and then you have tick strike as well. So I have all this on my other computer. So if we can get through this blue lug, I think this thing's going to get killed. But this, we're approaching a time of day where this just may do the usual juke, probably do one of these, stop everyone out, and then die into the end of the day. Or into tomorrow. Again, tomorrow's OPEC, so we may not do anything today. We may just chop around for the rest of the day. But like I said, there was enough going for this. I was willing to give this trade a shot. If it loses, then I wait for a move higher, and I'm still ready to short, willing to short. Too much structure, too many things have been violated here. For me to think, like I said, if this market was truly bullish, why did this thing not take off? Especially after that it should have done that at the time, didn't. So I expected that. That's what happened. Well, then why didn't this thing go? Why are we back here? Why is this about to break all this structure here? Right? Because it's going to go to zero. That's why. Just kidding. We have a joke in my room every day that I say it's going to zero. I've been thinking it's going to zero since COVID. So, and that's just another example. We talk about that quote all the time. The markets can stay irrational longer than you can stay solvent. I've been thinking we're going back to the lows since COVID. I mean, can you imagine if I just put on shorts every time and just held them? I'd be blown out, right? So it's like, yeah, I have opinions, but I let the real-time buy-in tell me, direct me in which way I should be trading. I'm a day trader, so I'll go long just like I'll go short. I'll try to hold things if I think it's a bigger picture type of view, but I'm taking trades both ways. All right, so we got a round of golf at TPC right now, so I can get out right now and go golfing. That would be fun, but I'll just hold this and see what happens. And there has literally not been another setup in any. Well, there was gold, but I did not. Well, actually, I'll show you guys something in gold last night. I didn't take it. I was looking at it. I was going to, and I got sidetracked. But this is the perfect example of this liquidity and just what games these guys play. Let's see here. So this was last night, right? So you had this came in here. You had huge sell ice. Not huge, but it was big, especially for late at night. You can see the time. This is mountain time. It actually did. This was an ATR. ATR was only 11 at the time. Did ATR retest, fail, and I was going to short, and I left my office, and I came back, and look what was all down here. Hey, wow, what do you know? And guess what? Market came and filled every last bit of this liquidity. This, guys, if you understand, we talk about all the time of you can sit there and get mad and say these markets are manipulated because they 100% are, or you can join them. If you know this is what Bookmap provides you, it lets you see what they are doing, right? So if you can't beat them, join them. If you look at a chart and you see liquidity all one way, you can bet your butt that eventually we're going to get to that liquidity. It doesn't mean it's going straight there, but like we were talking about earlier, when you're coming up with a thesis, it behooves you to know where the liquidity is, right? So all that liquidity got filled. I restarted this computer, but it makes me mad, but it's just hysterical. I don't know why it makes me mad, because that's the game I used to play nonstop. So, but just, now being a retail, smaller trader again, not backed by thousands of contracts, it still feels like you're being violated, but you know what's happening, you know what's happening, you know what's going to happen, right? So that is huge information. So once again, I don't care how great of a market technician you are, if you're not using this information, this is just liquidity, these are algos, but I'm saying longer term stuff. If you're not using that information and this information, you just don't have all the information. Could you make money trading? Yeah, probably not over the long run, but you could. But if you have this information with what you already know with important areas that you deem important, and understand how the market reacts to these areas or how they should react to these areas, then you have all the information. Right? And if you're not using this, you don't. I don't care what anyone tells me. To the day I die, I'm telling you this is the edge that you need to be profitable in markets. So, all right. So what I'm going to watch here, obviously, is this, because we are at a terrible time of day. I'm hoping we get through here and build some new lows. That'll be very helpful. But if we roll down to here, and this is where you want to use your bubbles too. Like you get all the time, guys get Bookmap and they get all giddy with the bubbles, and they're trading off the bubbles. Guys, this is just market buying and market selling. Sometimes it's very important. Sometimes it's just, most times it's just random buying and selling. Where you want to use it is when you come to important areas like spot gamma. So if this market rips down here, I will give it a second to see if it can rip through. So if I see red bubble, red bubble, red bubble, well, I'm not going to buy. Why would I get out of any here? Why would I want to be a buyer if no one else is buying? But if this comes down here and I see red bubble, then I can kind of see it stalling, might go a little bit below, and then I see blue bubble, I'm going to get out of some, right? Because I know what an important area, and I know dealers have to hedge themselves at this area, right? So hopefully we can get down here and I'll show you what I'm talking about. And then the other thing, other thing you want to look for is liquidity and how it reacts at liquidity. So trying to find an example here from today. Well, first and foremost, here's crude, so you know where we're going today, eventually. Look at that. So you see any difference here of where we're, it may be in it tomorrow, but I would be willing to bet around the golf we hit that before we come down here. Black hole liquidity. Where do you think we're going? All right, so keep an eye on that. But I wanted to show you like an area. I'm not really seeing it here. So
Yeah,
yesterday,
this is looking good, Scott, on that ES.
yeah, until you just jinxed me. Thanks a lot, Bruce. Appreciate that.
You're welcome.
You're welcome.
No, there's Luke is saying that apparently there's some sort of study here that if you nailed the trading day scalping the market, your short game in golf is incredible. If you hit a trending day, your long game is incredible.
That's good to know. That is good to know. So you can see here, this was actually this is a good example. But so for instance, so you see this liquidity, shocker, the market went up to it. But there's two ways you want to. So you have to have when we talk about this too every webinar. We'll go over this again. This is straight from trading in the zone, right? So these are the rules that I hammer home to my trading room every day, right? So we get a trade, and actually I got to put in here as well.
Scott, we need to wrap up the webinar short today at 11 East Coast time.
Okay.
So sorry everybody about that, but we'll be back to the regular schedule next week.
Okay, so quickly, what I look for, if you come up to this liquidity and you start to see bubble, first of all, as it gets close to the market, you're not seeing it here, but the market will pick up that size, or the algos will pick up that size and try to run it away. So that's where you can use your bubbles. Or if the market gets above this liquidity and then you start to see it fail and you see red bubbles, that's another reason to get out of some, right? So that's just one of the areas where I'll get out. I'm not seeing anything here, but anyway, so I'm short this. We obviously have to get off here. Bruce is ruining the party as usual. If we come down to 25 and I see some blue bubbles, I'm going to get out of probably two of them, and I'll let one ride because I don't think this is going to get killed yet, but I'll have one on. And then what's probably going to happen here, this will be ideal. If this thing can move down, we get a new volume setup, right? Then I can trail my stop, an ATR, 110% of an ATR above the new volume setup, and I can actually add to this trade. And I may add aggressively if we can build some new lugs based on everything. You see how this here is trying to bounce off this thing again. So I'm just waiting. It's going to happen. It's just whether it's going to happen right now or not. And it doesn't look like that's happening. So anyway, if we build new lugs, we get a new volume event, I will add, and I will trail my stop based on the new volume event. So obviously a very abbreviated webinar today. I just lost my round of golf. Now I'm only up a couple beers, which is not cool. But I will stay in this trade until I get stopped out and or a new volume event comes in. And that's it for today, I guess. Thanks a lot, Bruce. Ruining everything.
Wow. Okay, I'm sorry. Something just happened. Sorry, everybody. Can you hear me still? It looks like hello. Are you there?
You hear me?
Oh yeah. Now I can hear you.
Okay.
Yeah, sorry about that.
Talking.
Yeah. Sorry, just got disconnected really quickly there. Anyway, no, thanks, Scott. Thank you, everybody. We got to cut it short. I put Scott's contact information here into the Discord and in the YouTube right now. I'll put it in. So if you want to reach out to Scott, you can. He offers mentorship and education over there in a live trading room. So some good stuff there. And else, we'll catch up with you next Thursday, Scott.
All right, great, Bruce. I appreciate it. I'll see you guys all next week.
Thanks, Scott.
Thanks.
Bye.